What if I told you that we were at the end of our current economic cycle? And what if I told you that what we are seeing now is the disappearing middle class? I'm going to show you today why this is one we should be paying close attention to. Beginning with this, spam goes on lockdown due to inflation in New York City. I'm not talking about the spam in the comments section. I'm talking about this canned food, I guess you want to call it that. This right here just showing us that, I can't believe it. It's not caviar. This is literally spam being put under lock and key. And it's not the only product this is happening to. We're talking about a product that's like $3 and it needs to have a security device on it. Check this article out. Why Old Spice, Colgate, and Dawn are locked up at drugstores. They show the image here, and it might be hard to see on your screen, but essentially looking at the toothpaste actually being protected. I guess you have to use a key to get in there. Toothpaste, $3, $4, $5, and so on. It's unbelievable. Apparently what's happening is individuals will go in, they'll swipe them, and then they'll resell them online. But understand here, when it's $3, $4, $5, your profit margin's probably 20 cents, 50 cents, whatever it might be. This is not exactly something that is sustainable. But the point I want to make is that when you see this, you know that prosperity just continues to decline. And along with that, disappearing middle class. And then when you have a disappearing middle class, your economy is gone. Look around the world and see this. Look at where there is no middle class. Look at where you have problems with heavy inflation. The economy is completely messed up. It's all over the place. When you have a really good, strong middle class, you generally have less crime. You generally have people that will respond to the different surveys and say, I like where I live, I feel safe, I feel good, I feel content, consumer confidence is up, and so on. Now, this is truly unusual, yet the stock market doesn't seem to mind. This article here is talking about how the stock market is basically rallying at this time, even though we're watching interest rates rising. And in fact, they talk about the former president, I believe he was, Bill Dudley, or governor or president, whatever his position was at the Fed, New York Fed. He's had some, in my opinion, very important stuff to share. It could be that investors are proving hasty. After the last two Fed meetings, big gains were followed by even bigger sell-offs. That's something I talked about in a video a few days ago. Many economists are puzzled. Bill Dudley, a former central banker, says markets are underestimating just how far the Fed will go to tame inflation. This is a guy who used to work at the New York Fed. It's like the head of the head. And that is something that we should be keeping a close eye on. He noted that Powell repeatedly pointed to the Fed's June projections that showed officials expected to raise rates to about 3.4% this year and 3.8% in 2023. So the continual increases should occur according to what Powell has pointed to. And what he says here is exactly what I keep saying. That suggests to me that the Fed thinks they're going to do quite a bit more than what's priced into the markets. You see that? The Powell pivot? If anybody could point to that, I see all of the YouTube videos, Powell pivot, and they're talking about as if a pivot has happened. These are people in this space. They mention it. Where is it? I haven't seen it at all. Given all that hawkishness, what it explains the upbeat markets, the assumption is investors are betting Powell is going to pivot. Economists at Goldman Sachs saw 5 reasons in the chair's comments to think the Fed will now slow the pace of rate hikes. And yes, they go into that, and I get it. I do believe that they're not going to do 75 basis points. That could very well, September, 50 basis points. Maybe the ones later in the year, 25 basis points. But are they going to necessarily stop and start declining when markets are doing well, when the job numbers that they show us are fantastic, when inflation may be coming down from its peak? I mean, on what grounds are they going to reverse that? There's no reason why they would do this. It doesn't make any sense. They want to give themselves a cushion for when the crisis hits, they can start to lower interest rates. Why start already? The recession that we're dealing with now at this point, there isn't much for them to do. Why would they reduce it? I mean, that doesn't make any sense. Something is very weird with the marketing message that is being put out in the media, both the mainstream, but I don't even care about the mainstream. I mean, my goodness, it's the alternative. So now I'm going to take you a trip around the world. Let's begin by looking at Europe. The euro feels the pressure as the economy tips toward recession. Single currency is hanging on just above dollar parity. And they keep mentioning Italy, Italy, Italy. I talk about this in my first book and my second book. I said specifically, watch Italy and Spain because the high debt levels and unwillingness to actually resolve any of the problems make it number one targets. Of course, you've also got Greece. You've also got other countries that cannot resolve their issues. Doing what they're doing right now, especially being part of the euro, is just not going to happen. So what I look at with Europe, number one, is the fact that they are sliding into a recession at this time, knowing we're going right into a very, very harsh winter because natural gas prices, are going to be excessive if things don't change with Russia. So that's something that is of big concern. Yeah, they're trying to bring Qatar into this, but it's just not something that's going to happen overnight. There are so many pipelines bringing that gas from Russia, and you can't, change that. You just can't change that like in a snap. What about Hong Kong? To report contraction in GDP as global headwinds mount. So this is yet another spot that is dealing with the same things. It's a global phenomenon right now. China's rebound remains fragile as manufacturing and property slump. Factory activity unexpectedly contracted in July. Property sales from China's top developers continue to drop. One of those, Evergrande. That's right. Yes, you haven't heard much of Evergrande because they're kind of trying to bury that news. But let me tell you something. Evergrande misses deadline for $300 billion debt restructuring plan. They're not going to be able to deal with this. But why haven't you heard about it? Well, let me tell you something. Try and look for Evergrande stock. They halted it. They halted it a while ago. It was collapsing. And that's how you stop it. You simply don't allow the stock to trade. You don't allow the companies to put out information publicly. It's all under control. Or is it? You see, when we look around the world and start to see the exact same things happening, high debt loads, zombie companies, nations that bailed out the corporations back during the financial crisis, never resolved the problems, and now we're dealing with it all today, here and now, I think this spells disaster. But when people hear that, they get triggered. And that's unfortunate because this, you know, I wanted to have a little rant GPS, but I'll spare you. Carriers unable to pay drivers buy fuel after core fund capital closes. Factoring company shuts down, fire staff amid brothers' legal spat. They basically get into this and how serious it is. It's just one group, of course, but it extends further. Freight is just having so many issues, and this happens to be about rail. Ongoing supply chain disruptions. The U.S. business community faces enormous challenges today: record inflation, labor shortages, ongoing supply chain disruptions. And this is just one thing after another. Rail is one of those. I saw so much going on with air. I saw that even with sea shipping, dealing with it myself. I mean, there are problems of all kinds. It's just unbelievable to see it, okay? So that's what I wanted to leave you with. Just looking at all the data and trying to, in my opinion, break it all down, try to make it simple. Because when you look at all of this, it might be very complicated, but when we break it down to the lowest common denominator, it starts to make a heck of a lot of sense. You watch the cycles repeat. You watch the same patterns over and over again. The central banks are not foolish. The central banks know exactly how to evade all of the, let's just say the finger pointing. They know how. Oh, Powell, they didn't realize this and that. Oh my goodness. It's all happening before our very eyes, and the public, the alternative media, and the vast majority of individuals will never see what they do because they never look into the deeper layers. Understand that what the central banks are doing is intentional. All of it is intentional. Never think they're ignorant. That's my message to you. I hope you appreciate it. If you did, you got to subscribe to the channel, okay? Hit that subscribe button down below. The channel is growing. Can you believe it? This is fantastic. I'm going to bring you so much more information in the coming days. You definitely want to subscribe. See you there.